Hey everybody, it's Sunday. Sunday's Q&A day, and we're going to touch on some stuff that I never talk about. So welcome to again another set of very interesting questions. Also, different types of questions that I'm answering today. Again, I rarely do, but they're so important. So let's get into the story. Thank you all for coming. Thank you to Shoni and TD Tesla and K8 for being in the chat. Let's jump into it. This is called seasonal rotation. As you know, I like to look at seasons and try to determine what it means for us, because sometimes people can be spooked about seasons and misunderstand exactly how they operate. We will also talk about a biotech company, actually two, never done that before, and so much more. Let's get into it. And of course, not financial advice. And all the questions come from Patreon. And let's go into the first one first. Sammy, hey James, thank you for all you do. I have two questions, if you don't mind. One, every time August comes, I regret not selling and buying back at lower prices. What is your thought on this? And number two, what would you do if you were in a country where crypto is tax-free? Would that be my dream? Where would you start? How would you trade? What models would you use as a beginner? I don't have I have time to trade the whole time, but I can manage to watch it every 4 or 6 hours. I appreciate you and the team behind you. Thank you. Let's first of all talk about seasonality. I'm going to turn my camera off. Not that you need to see me anyway. You're not here for me. You're here for the data. So let's look at August seasonality for Bitcoin. You know, the old expression from the old days is sell in May and go away. But for Bitcoin, May can be pretty good. June, mixed, but on average up 7.5%. July, up 8.3%. And if you look at the average return for August, down minus 0.7%. But I want to call out one thing. You'll see here on the left-hand side, I've got green years, 2013, 2017, 2021, and 2025. These are the stage of the bull run we are in right now. And it's very important to look at just these months in isolation. So let's do that. And I added some color here to show you what August typically does. In 2013, 32.8% in the year after the halving. In 2017, 64.2% in the year after the halving. And 2021, 13.4%. The average of all of these, we don't have 2025 numbers yet because it's still June for 2 more days. But the average return for these puppies is 36.8%. If history repeats, August is not a month to sell, everybody. Not at all. Now, in a bear market, it can be brutal. Think 2014 or 2015. Think 2019 down 4.8%. Think 2022 down 14%. 2023 down 11.3%. 2024 down 8.8%. So yeah, August was rough the last 3 years, but we're not in that type of cycle. Seasonality works. It can be off by a couple months, but it often works. That is the first question. So we'll see. We also have a lot of stuff happening in the second half, like July through or December. That's typically when alt season kicks off. If there is one at all, we'll talk about that later. In terms of what you should do, in terms of tax-free trading, pair trading on steroids, a lot of people around the world use this for tax-free trading. It's a killer because you get to play both ways. You get to play long going up and get to play short going down. And that is a killer model. Also, the rotation model is perfect for somebody who can watch the market once every 4 or 6 hours as well. Swap between 5 different assets at opportune times. That's what I would do if I was tax-free. Next question is from Rainbow Genie. I recently gave into FOMO and entered a trade, breaking my own rules and got burned for it. I feel foolish for it. It got me wondering if you have a pre-trade checklist or specific factors you look for before entering a trade, and how can I prevent this in the future? Or are there any situations where FOMO trading might be acceptable, or should it always be avoided? I think it depends. FOMO is one of those things where you start to let emotions take control. Never let that happen. And the other thing, the way to eliminate FOMO is to have a thing called patience. I think it's one of the top 3 rules of investing. Be very patient. I always talk about being a sniper in the woods, covered in deer urine, hiding up a tree, and just sitting there and waiting. Sometimes you wait for weeks, for months, for years for things to fall into your traps. So this is not my comprehensive pre-trade checklist, but it's how I operate. And I'll go myself to top left here. I like to watch select names. I have a watch list of about 200 names, again, covering all assets. And the stuff in there like oil and gold gives me a good feel for the macro. But if I miss them, for example, if something I missed the bottom of, but I keep an eye on because maybe it's interesting, maybe it's fundamentally good, maybe it's a good hedge, I wait and I set alerts on TradingView on key support lines using tools like ATR. And I wait. I've done many videos where the TradingView ping goes off during my video, and it's like, oh, I'm in the middle of a video. But anyway, I also confirm if one of these things does fall into my trap. And as you know, I'm very patient because that's how you win. Be patient. Never chase, replace. But I make sure the fundamentals are still good, like a moat, TA, financials, etc. 3 examples, and this week I'll talk about as well, of trades. I also validate the TradingView alerts and the charts, make sure they're still good, make sure the trend is good, etc. And most importantly, this is a rule I always talk about, but you may not remember it. Whenever I enter a trade, I always know my exit. Sometimes it's a perpetual trade, unless the thesis changes. But I always know, for example, if I buy something at, say, 33 cents, I want to get out at 90 cents or $1. 3x is what I always look for. And I am religious about that. The TradingView alert will be on the exit level as well. And I scan for risk, e.g. legal, competition, etc. Has anything changed since I last put it on my target list? And then finally, I calibrate the size of the position. So I did something very interesting in the last week or so. I was waiting on this one name for a long time. I'd been watching it blow up for a year. And I was never on the butts at all. And then I saw a really good options position when it sold off about 35%, and I jumped in hard. And that position went in a very short window of time through leverage to being my 6th largest position. So again, I look at the potential upside and then take it from there. So sorry, I have some noise in the background. Apologies. Hopefully it doesn't come through. Hang on a sec. I gotta fix this. Hold on. Pardon my dust. Live TV fixed. Okay, so that's kind of my short trade checklist. Make sure all of these things, and there's a lot more to this as well. I can go deeper if you want at another time, but that is just kind of the short things that I look for. But again, I wait. I don't think about things, from one day to the next, I'm going to buy this. These are things typically I've been looking for a year or more, and then I jump. So I hope that helps. Next question is from Estamment. Does it make sense to use IBIT as a Bitcoin proxy and buy a leap? As we know, Bitcoin price will go up. It's a matter of time. How does IBIT price correlate to Bitcoin? Very good question. And absolutely, yes, you can. But you want to buy leaps typically when prices are beat down, like we had a great entry there around 76K a few weeks ago. And now it's just shy of 108K. It was actually woke up and Bitcoin was over 108K. But this is IBIT as a Bitcoin proxy. You can pull this up in your TradingView. You take Bitcoin, you divide it by IBIT, and this is the price. Approximately, depending on the hour or the day, you get about 1,760 shares per Bitcoin. So one whole coin is 1,760 IBIT shares. And it does fluctuate. The reason you see fluctuations here is because Bitcoin trades 24/7, and IBIT only trades 27% of the time when the markets are open, even if that's so. That's why you see these fluctuations. So if Bitcoin goes on a rampage over a weekend, IBIT has to catch up the next day. That's the problem. And that's what you see here in this chart. And in terms of trading as a proxy, yes, you can buy leaps. You can also use it for Arb Cloud. So this is the Arb Cloud offering. It tells you when to buy MicroStrategy, when to sell IBIT, and vice versa. If you're tax-free, this is a killer strategy. And it's like stealing candy from a baby. Real easy. So yes, you can do, for sure. Next question. It's been a while since we've seen Chudley. Hey, Chudley, welcome back. Are synthetic shorts a tool in your arsenal? I see stocks like Coinbase getting overextended. And if we do get a bit of a crypto winter again, I would expect Coinbase to get crushed like it did in 2022. Very good. Thanks for everything you do on team. Yeah, this is so synthetic shorts are like a double-edged sword. I actually tried to do one on Circle at 270, and I could not make it work. Okay. First of all, the options pricing was completely out of whack. The cost of the puts was outrageous. The calls were crummy. So basically, to do a synthetic short, you want to buy the put and you want to sell the call to fund it. It's just nothing worked out for me. I ran through so many simulations for about an hour, and the most I could make in the trade was like 30%, given where I thought the Circle price was going to go to low 200s, and it wasn't worth it. The options pricing was out of whack. And one of the cool things about SLs is when you sell puts, and even if the stock stays flat, they go to zero. And that means you take a lot of risk off the table. With these puppies, though, it's another story as well. The problem with synthetic shorts, it is a sharper knife, and you do have unlimited loss potential. Okay, if you sell a call and you are not long the asset, you can get wiped out. Okay. Also, you have asymmetrical volatility exposure. And the problem is as well, doing this in a bull market is very dangerous. Remember, the shorts, a lot of people who are perma bears, they only know one game, and that's kind of doom and destruction and number go down. They are very pessimistic people. The problem is they get wrecked 85% of the time. The market's full 15% of the time. But you want to be long most of the time. So be very, very careful with synthetic shorts. You also need a truckload of margin. And I like to use it going long instead most of the time. I do play games, but also callers would be a good option here as well. But the options pricing has to be correct in order to do that. Hope that helps. Has subs. If the Solana ETF gets approved this summer, what kind of impact do you think it could have on tokens like Jupiter? The team continues to ship strong product updates, but the project has definitely taken a hit recently with DAO votes and ongoing concerns about tokenomics. Would love to hear your thoughts, and if your game, maybe even a price prediction. Ta-da! This is one little personal story from last weekend. I was chatting with Sanjay, and I was like, I like to have my ops and positions ready to go, but I wanted to buy this, and I didn't have any cash available to buy. I had no USDC, and I could not move any money to my account because it was a Sunday, and I wanted to buy Jupiter at 33 cents, and I was kicking myself. So I had to wait till the following day to get things funded and everything else, and then I bought it at 37 cents. So I missed 4 cents, which is really painful. But the point is, always have some cash loaded to buy and take advantage of these things. So that was kind of what happened. Now, let's talk about the Jupiter tokenomics before we get into what's going to happen next. They've done a couple of things that were kind of very big. One is June 2024. Meow, the head of the project, burnt 30%. So they reduced the supply from 10 billion to 7 billion. Also, they're now using fee distribution to buy back the token. And this is going to go on. It'll allocate 25% of fees to stakers as well, which is great. And the airdrop, one of the reasons I like Jupiter is you get free airdrops all the time when you vote on the DAO proposals and also when you use the platform. So it's extremely lucrative, at least for me. I do have my Jupiter staked as well, and I've had that done now for years. So I think it's still a very good project. The inflation is about 9.5%, and about circulating supply is about 42%. So tokenomics are not optimal, but it's also a very new project, and they're taking strides to make it. But I still find it very worthwhile to invest. And this is the big thing. Sol ETF approval odds in 1 month shot up over the last few days. Okay. A lot of people expect it to be approved next month in July. So this could happen. Either way, it's 95 to 98% certain it will be approved this year. So we just need to be patient. But when that does happen, things will really kick off. And not only will it really help Solana price, in fact, we're seeing a lot of moves by institutions now on the futures side, on the institutional stacking side, on the infra side, like Gemini setting up staking for institutions for Solana, because the new ETF is going to be a staking ETF, yet another game changer. So it'll be super exciting to watch this puppy, mark my words, and it will really help with things like Jupiter. Let's look at Jupiter chart. Turn myself off. Here, you can see the all-time high is approximately, let me zoom into this so I can make sure I get the exact penny amount, about $1.90, $1.90. Do I see it going to $1? Absolutely. Maybe $1.10. So right now we are below level 3. If you look at this chart, all right, that's when I saw the buy signal on the ATR model at 33 cents, and I pinged Sanjay. I said, get some. I don't have cash. I got to wait till tomorrow. It was so annoying. And that was like Sunday a few days ago. Anyway, it has recovered very nicely. It's now about 45 cents. I get in at 37 cents. I added largely to my bag. I think this and Sol will do very well. And this is also my largest Sol alt position by a very good margin right now. So yeah, buying at level 1 is a no-brainer. Is it going back to level 2, 3, 4? The answer is yes, but we need all season to kick off. And I do believe, and I've said for a long time, the catalyst for all season, like lighting a little fuse here, will be the Sol ETF. And then things will kick off. Plus, the second half of the year is always best at this stage of the bull run for the alts anyhow. So watch the space. Anyway, next question is from Josh Morris. Good day, James. Thanks for all the gems you share. Absolute quality. My question pertains to HIMS. On the back of the recent news and share price drop, can you please do a deep dive and provide your thoughts on the company? NFA, just looking for educational alpha. Yes. So HIMS was one that it has been super interesting. This is one that I spoke about at the beginning that I wait for. I set my traps and wait for the fly to fall into my trap. And that's exactly what this one did. But all the fundamentals are extremely strong. The revenue growth, the operating margin, the number of subscribers, etc., their moat, the way they approach customer relationship management with AI and all that other good stuff. It's very impressive. Plus, they sell very high margin things. Weight loss drugs, hair loss drugs, other types of drugs that men and women need, which we will not go into right now. And I don't normally touch pharma, but this is a different play. This is much more like a community network play that uses AI, it disrupts the incumbents in the space and helps people that maybe don't have insurance to get products that they need. So we'll see. Now, the reason it tanked so hard was because they lost the ability to distribute a product called Weygovy, which is a weight loss NGPL or NGP1 drug hormone stuff, whatever. But I think from my numbers, the most impact it would have is maybe 15% on both profit and revenue, and they are outgrowing that, so they'll be able to take the loss. Did that 15% loss of potential business warrant a 35% drawdown? The answer is heck no. So I entered. Nothing happened for 2 or 3 days, and then it kicked off the last 2 days. Thursday and Friday, this thing shot up 10% plus a day. Right now, I think it's trading at around $50. But a couple of other things just happened too. HIMS just yesterday yesterday, Friday, last trading day was open, joined the Russell 1000, which means they're going to get a perpetual bid, okay, from the index fund demand, institutional buying, etc., much bigger spotlight. And some people believe HIMSS is the future of healthcare. So that's a big tailwind. And again, using the ATR model, simple little cheat sheet here. It fell below level 4. I had been watching it for a long time. I wasn't on the train. But when it dipped to that level, I knew it was going to mean revert back up because of the fundamentals. This is one of those examples of how you don't get FOMO. You don't chase. But when things get beaten down, then you jump in. And that's exactly what I did. So we'll see how this thing plays out. But I also have target exit levels as well. And we'll see. But this is the funny little meme regarding this. HIMSS at 67 bucks. This is the FOMO stuff that I'm talking about, that with the very first question, the checklist. Don't be part of that FOMO community. You see, you can't even see me on the black door because I already went in at 40 bucks or less. That's what you want to. You wait for these things to fall into your traps. That's the secret. Next question from Crypto Plumber. Much respect. I'm an avid follower and Patreon member since July 2020. And woohoo! Thank you and your team enough. 4 years. Wow. My British daughter is married to a hardworking and lovely American chap who works for a pharmaceutical company called Vertex. And they're doing amazing work for a cure on diabetes. Over the last few years, he has amassed over $200,000 in stock-based bonuses in VERX. By the way, that ticker is wrong. It's VRTX. But anyway, I'll correct that in the subsequent slide. It hasn't done too badly until a recent dip. But I feel he should convert much of this to AI plays such as Tesla and NVIDIA to maximize gains over the next few years whilst they can start a family. Both are in their late 20s and they have yet to buy their castle. Please, can you offer your opinion given the vast experience with investing? And me being a plumber in England, I've spent a lot of time doing plumbing work too. Much respect for your trade and craft. And that's one of the great things that will not be replaced by AI. So you'll be one of the very rich people in the future. Anyway, I think he finds it difficult to take advice from me, which is understandable. No, I think your advice is good by playing the AI game. But the question is, what will this pharmaceutical stock do? So, and he has a 401k, which I believe may be the most tax efficient way to do this, if similar to UK SIP. Yes, it is. So he's got this in a 401k. That's great. And he should probably think about doing something with a 200k. By the way, a quick note here, VRTX is Vertex Pharmaceutical. VERX is a different company, completely different play. When I pulled up the ticker, I started analyzing that other company, and that would be one I wouldn't touch. This one, however, is a little bit better. Now, while the revenue growth is not that good, their cash position is good and their debt position is manageable. So this is the first thing I'll look at. Next, the pharmaceuticals. Remember, companies like this, they spend a decade trying to develop a drug. Okay, 90+% of them fail. But this one has promise. So things like low earnings growth, etc., return equity being negative, I don't mind, because when you look forward to what they're trying to do is pretty impressive. This is what their treatment does. After some help as well, shout out to Sanjay, who is a medical physician as well, helped me with this. But basically, a single infusion of their drug called Zimiclecal, whatever it's called, led to sugar control, keeping glycated hemoglobin under 7%, which is critical for people with type 1 diabetes. And severe low blood sugar episodes were eliminated completely, which is huge because they can be life-threatening. And 83% after one hit of this drug no longer needed insulin. And this is only phase 2 of testing. It's not fully approved yet, but the tests have been bonkers good. This is massive news. This is the medical jargon from the NEJM, which is a top medical journal, peer-reviewed, etc. Whenever they publish something, you know it's rock solid. And over 8 million people have type 1 diabetes on the planet that we even know of. Okay? And very, very few actually would not benefit from this drug if they can get through phase 2, etc. Not a lot of participants. I think 14 participants, 2 at half a dose, etc. And you can read all the rest for yourself if you understand this. But the net is it is very, very successful so far. Let's look at the chart. Here you can see the chart takes us on a little bit of a journey. Right now, the chart is not looking extremely bullish, like you mentioned, but it's not bad at the same time. The all-time high is about $600. It's now trading about 441. So yes, it has come off the highs. Yes, the trend is down. Yes, there's a sell signal. Could it fall to 420? The answer is yes. Could it go back to 600? The answer is yes as well. So it's right between level 5 and level 6. I don't know if I'd be selling here at all. But remember as well, biotech pharma is very risky. But this one is super interesting. If considering where we are in the stage of AI and all the crazy stuff that's about to happen, I would definitely take a little bit off the table. You don't want to be like if their entire bag is hitched to this wagon, maybe take a little bit and build a retire on bag of Tesla shares or a little bit of NVIDIA as a combination, but keep half of this one at the very least is what I would recommend. And it's not normal that I would recommend a pharma play because they are super risky, but this one is super interesting. Hope that helps. Next question is from Michael Ireland. I'm relatively new and late to this, i.e. investing stuff, being 55, trying to retire from my own business at 60 and take care of my children and extended family. Well, kudos to you. I have 2 short questions. One, I have a portfolio of £700,000 with small rental returns. I have 200K pension with 80% in Tesla, 20% NVIDIA, and 350K in crypto. So you got over £1 million bag. So you are well set, my friend. I have 30% in SAY, 20% in SOL, 20% in ICP, 10% in ENS, 10% in HNT, and 10% in AVAX. So I get rid of some of those donkeys completely right away. You know what they are. ICP, ENS. HNT is interesting, but Avalanche needs to go. And having spent a year researching, watching multiple YouTube videos, you were the only one person I listen to and trust. Don't trust anybody, just trust the data. I follow your trades as best as I can. And I jumped on the SAY one, for example, and did fantastic. That was great. Do you ever issue trade alerts when you are selling and taking profit? For example, say yes. I share every single move I make, including transfers, which aren't trades per se, just moving stuff around. I'm feeling a bit all over the place with no clear direction. It's hard to plan. With some of the crypto sitting at a loss. Yeah, I know those names. Get rid of the garbage. Stick with high concentration on the winning assets. You know what they are. We just talked about 2 of them already today. I have tried your IDS model, which is great, but I don't have the experience to work it properly. Maybe some of the other models will be better. So let's first of all mention I do share every move. Say it was a solid call highlighted in the video. Did nobody watch that video, by the way? It's very bizarre. And then about a few days later, people started watching it because Say started moving. But that was a great one. So what you should do is regarding profit taking, I like the way you're thinking. Yes, be prepared to take profits. There is a potential all season incoming. Have your finger on the trigger to exit. I will share exactly what I do as well. If your thesis changes in any asset, sell. Watch the data. A lot of these chains actually hide their data. They obfuscate it, so they don't even share users or transactions or revenue because they're so embarrassed by it. So be careful of that too. And also, finding alpha in this late bull market is really hard, but not impossible. As you've seen in the last week or so, we nailed HIMS, Say, and Jupiter, and there's more to come as well. So just be ready with that. And in terms of tools, the simplest, best tool just to add to positions is the ATR model. That's the go-to for people that aren't able to watch the markets all the time. So hope that helps. And helping animals this week is Gizmo, Egyptian fruit bat, born in the exotic pet trade, which is awful. They live approximately 1 year as opposed to 25 years in nature. So having them cooped up is not a good thing. But a friend purchased Gizmo from his captor and placed Gizmo in a sanctuary where now hangs out with the bad friends. And hopefully we'll live 25 years. So it's a happy story, everybody. Awesome. And tomorrow DCA Live. Everybody should be back from their vacationing. And a big shout out as well to Rob, who joined us last week as well. So let's get into some questions, everybody. And a thank you as well to the moderators in the chat, waiting for the questions to pop in. Somehow there's always a delay. So I'm gonna go pull it up on my cell phone, which I have in airplane mode, and see if they're here as well, so I can read the questions. No questions. All right, there they are. Questions just popped in. Okay. That's why I don't have my phone on, because it's just nonstop pinging. Sir Winston, if you were to receive a $75,000 cash bonus, which AI stocks such as Tesla investor would you deploy? Any other suggestions would be great. So, I deploy based on what I think is super cheap. As we discussed earlier, the big deals just over the last week or so were Jupiter, Say, and HIMS. I haven't bought Tesla in over a week. I'm hoping for low 300s, and then you'll see me deploy. Fingers crossed the mainstream media can drag us down to that level. That'd be fantastic, everybody. So that's kind of what I do. But, if you do see, when you fall into like a big amount of money, like 75K, think about deploying some when you see good opportunities happen, but don't feel rushed to jump in. Summer can be quiet, and always something will go wrong on the markets, and have your traps ready. Get familiar with TA, put your layers in, your alerts, and then deploy. Also consider maybe buying a leap or two when things get beaten down as well. That is the way to go. Tchaikovsky, got it to you too. Doc Intern, watching at 35,000 feet above the Atlantic, flying back from vacation. Wouldn't miss the Q&A for anything. Woohoo! Hey, Doc Intern, you must have Starlink up there if you can watch a video, because nothing else will work. Thank you for being here, Doc Intern. Appreciate you. I hope you had a fun vacation. GQ Trader, in a perfect world scenario, trade deals are in place, no war escalation, and the Fed cuts rates. Thinking in terms of the rotation model, what are the fastest horses for Q3 and Q4? I like the, I think Q3, Q4 will be good for things like Solana and maybe some of the Solana proxies. They'll kick off. A lot of money will be deployed. The amount of stuff that Tesla has coming, like the Model 2, they are about to open their LFP factory. The semi-truck factory in Nevada is about to scale as well. FSD Robotaxi is a huge success. You wouldn't believe it if you read the media. So that's what I would think. NVIDIA continues to crush it. They just broke a new all-time high as well on Friday. That can't be stopped. So yeah, that's where I'd play. Position for the alt season. I think there will be one this year. And also AI on dips. I would not be buying NVIDIA here at this level. Because we had the $88 gift, which is delicious. 88, by the way. Shout out to anybody from Asia, because that's a good luck number twice. But yeah, that's where I would play GQ Trader. And also finding things that are extremely undervalued or beaten down. So I'm doing a lot of that. Again, it's really hard at this stage of the bull run to find deals, but we still find them. And we have alerts that go off that uncover them when we know the fundamentals and we know when they're completely oversold. And then we jump in, and it's that easy. It's not as easy as it was in the bottom of a bear market, but still, we're making it happen. And Joe, you're so generous to share your wisdom. I'm not wisdom. Anybody can do this. Anybody can do this. You just need to work your tail off. That's all you need to do. Thank you for your years of knowledge condensed into every video. I learn and gain confidence every time. That's good. Learn. ABL. Always be learning. And then build that confidence, and then paper trade, and then win 80% of the time, and then you're set. CPK, given the 4-month window, how should we set up for this? I have profit taking, and I'm learning rotation, which may be above my head. Rotation is easy. Just trust the model, but pick the right assets. Very important. I'm glad you have profit taking, because that's going to be critical over the next 4 months. Okay, a lot of people get trapped in the euphoria. Okay, and yesterday's video talked about the 4 months, the next 4 months that we've waited 4 years for are going to be the most important. We'll see if it kicks off. If history repeats, it will. If this time is different, it won't. I think it will. It might be a little bit different. It might be very fast. It might be curtailed, but be ready with the profit-taking model. Absolutely critical. That's what it was built for, these moments. And there's nothing wrong with taking a little bit off the table. But there's something very wrong with holding a bag that falls down 80% in a bear. That's painful, and that wrecks your head. Don't let that happen. Thank you as well for your super sticker, Nick M, QC Coiner. I wonder, are you in Quebec? Quebecois. French Dreamer, another French person, and John WG, Dog One, I'm Colt, and Mikey. Appreciate you all for coming. Hope you enjoyed the show. Question from Crypto Cruiser, friend of the channel. Any nuclear plays? I don't play nuclear because these nuclear investments, by the way, for them to succeed, it takes years and years and years to set up. So I don't have that. I don't have 3 to 6 years to wait for something to pan out. I like to get returns within a couple of weeks or months at the very latest. Nuclear moves too slow for me. So no nuclear plays for me. Thank you so much for energy play. Yes. Tesla's my energy play. Thank you all for coming. Have a great Sunday. See you tomorrow morning early on DCA. Than't you as well to Shawnee, K8, T&D. Love you guys. And Piper. Ciao.